This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we deal with the unclear language in a policy that was interpreted in favor of a property owner, even though the property owner was not named as an insured and was not an insured of the policy, and why a homeowner was found to be a beneficiary of a force-placed insurance policy, which makes little sense, but was based upon the wording of the policy. Keith Rath was unhappy with Arch Insurance Company over coverage for damage from the derecho, a windstorm that hit Cedar Rapids in 2020. Rath's bank, holding a security interest in his home, contracted with Arch Insurance to obtain a force-placed policy after Rath's homeowner's insurance lapsed. When Rath sued Arch for breach of contract and related claims, Arch argued he had no right to sue because Rath was not an intended third-party beneficiary of the contract between Arch and the bank. In a case called Keith Rath and Dennis Faltis versus Arch Insurance Company, the Court of Appeals of Iowa on April 10, 2024, read the full policy and found that the language of the policy gave Rath an interest in the proceeds of the insurance policy. The bank, of course, is Rath's lender for a loan secured by his home. At some point, Rath let his homeowner's policy lapse in violation of the terms of the loan agreement, and when the bank learned of the lapse, it notified Rath that the insurance it bought might be significantly more expensive than the insurance he could obtain himself, and might provide less coverage than such a personal policy. Rath then began paying monthly premiums for this force-placed insurance to the bank. The insurance contract itself was a policy that stated that Rath was the borrower and, quote, has no interest in this policy, yet included an endorsement expressly giving Rath a benefit. That endorsement provides that while Rath is neither a named insured nor an additional named insured under the policy, he shall be considered an additional loss payee only as respects amounts of insurance over and above the interests of the bank in his home. The Court of Appeals concluded that there was no possible purpose for this endorsement besides providing a benefit to Rath. The policy warns in a general statement on its cover pages that it does not provide coverage for the interest or equity of the borrower. It later defines the named insured as the creditor, lending institution, company, or person holding and or servicing the mortgage interest on the described location, and it expressly confirms that the borrower is not a named insured under the policy, and no coverage is provided either directly or indirectly to the borrower. The policy's default text also defines the borrower and then makes abundantly clear, quote, the borrower has no interest in this policy, close quote. But the last line was stricken and replaced with text from an amount of insurance endorsement that the parties added to the policy. So rather than having no interest in the policy under the endorsement, quote, the borrower is neither a named insured nor an additional named insured under this policy. However, the borrower shall be considered an additional loss payee only as respects amounts of insurance over and above the interest of the named insured in the described location, the bank. In August of 2021, a derecho, a widespread, long-lived windstorm that is associated with a band of rapidly moving showers or thunderstorms. Although a derecho can produce destruction similar to the strength of tornadoes, the damage typically is directed in one direction along a relatively straight swath. It swept across Iowa, hitting Cedar Rapids especially hard. A tree fell on the house, and it sustained wind damage. Among other damage, Rath believes most of the roof was damaged along with siding, windows, and electrical systems, and so Rath reported the damage to the bank, which made a claim to Arch under the policy. And after Arch's adjuster agreed that the dwelling sustained damage due to wind and tree impact, Arch decided that there was a covered loss of $1,222.37 and mailed a check for that amount to Rath, not to the bank. Why? I have no idea. Then Rath filed a lawsuit, and about a year after the storm, Rath sued Arch over the dispute of the amount of loss. Rath claimed that Arch breached the insurance contract by denying proper payment for his losses and refusing to engage in the appraisal process under the policy. He also brought claims of bad faith and unjust enrichment and sought declaratory and injunctive relief related to his rights under the policy and the appraisal process. Rath appealed the district court's grant of summary judgment and dismissal of all his claims and brought the case to the Court of Appeals of Iowa. Interpreting an insurance policy in Iowa, like in almost every other state, if not every other state, is a legal question. Rath's main argument that he is an intended third-party beneficiary of the insurance policy relies on the amount of insurance endorsement. The Court of Appeals agreed with Rath that the endorsement manifests an unambiguous intent to benefit him. Indeed, the Court of Appeals concluded that there's no other possible intent for contract provisions increasing the coverage above the bank's interest and giving Rath the right to payment. Saying that Rath is not a named insured nor an additional insured is not the same as saying he's not a third-party beneficiary, and by deleting that text while also increasing the coverage over the bank's interest and giving Rath the right to payment, the endorsement leaves little doubt that indeed Rath does now have an interest in the policy, because, to the Court of Appeals, he is an intended third-party beneficiary. The parties fought a preliminary legal skirmish on the limited ground chosen by Arch whether Rath is a third-party beneficiary under the contract. And because Arch lost that battle, the fight must now go on. In my opinion, poor wording in an insurance policy will often result in strange and confusing court decisions, just like this one from the Court of Appeal of Iowa. The court found because a clause allowed Rath to recover for losses over the interest of the bank made him a third-party beneficiary, it ignored the fact that his interest was only available after the full interest of the bank was paid. The loss was only $1,222.37, much less than a mortgage loan. And since the loss was less than the amount of the bank's interest, Rath had no right to that money as a third-party beneficiary, since the loss did not exceed the interest of the bank. I don't know why they found that, but it's the way Arch brought the case and brought its motion to give the Court of Appeal a chance to annoy an insurance company and require it to continue litigation with an insured who has no probable right to any of the proceeds. This video was adapted from my blog, Zalma on Insurance, which is available free to anyone who clicks on the link and on the URL zalma.com/blog. You can subscribe to the blog, and you'll receive notice of every blog posting, usually 5 or 6 a week, and you'll have access to the more than 4,750 blog postings. Please tell your friends and colleagues about the blog and the videos so that they too can subscribe. And if you view this video on YouTube, please click on the like button. And if you view it on rumble.com, please click on the thumbs up button. And if you're interested in further detail about insurance, insurance claims, insurance law, and insurance fraud, please consider for a very small fee subscribing to my Substack publication. Thank you for your attention.